me a god. You call me a god. You call me a god. You call me a god.
Let's go. I'm about to go off like a weapon. Fuel to the top, got a filled up engine. In my thoughts, obsession. I will not stop, no, I'm never second guessing. I got a God complex. Haters love to hate, but I never feel pressed. Got a lot on my plate, but I never get stressed. I'll take all the pressure like I'm acing this test. Tear it up like I'm Jason. I see the world like it's ready for the taking. I see this place like a game I'm playing. Straight to the bank to collect my payments. No negotiations, it's my way, I was born impatient. And like a damn Freemason, I'll run this nation.
You call me a god. You call me a god. You call me a god. You call me a god.
I don't know how to stop. I just go till I drop. Whether it's working or shots, give it all that I got. You can watch me work in my element. Anyone in the way is irrelevant. You wanna cross me, cool, not intelligent. Cause I don't forget shit like an elephant. Go ahead and tempt me, put it on the line and you'll come up empty. If I got time, I'm deadly. Never caught off guard, no, I'm always ready. I got a hand real steady. Look me in the eye and you'll see no hezzy. About to get real messy. I'll put you in a grid 6 feet like Kenny.
You call me a god. You call me a god. You call me a god.
What's good, everybody? It's your boy Reckless Raiden Arrow, and we are back at it again for another episode of Future Financial Strategies. How are we doing? First and foremost, we're going to get right into the business. We got to give a shout out to the sponsor of myself, the platform, all the things and tools that I use to keep ahead of the pack, to stay on top of my game. Shout out to Delta Investment Tracker app. If you are not currently tapped in and using the Delta Investment Tracker app, down in the description below, there will be a link. It does not give me anything. It just lets people know that you found out about them via this channel. And, lets them know that I'm doing my job as someone that is sponsored by that company to send people their direction whenever I get a chance, because we're not trying to hide the tools that we're using behind the scenes over here. We want everybody to win, and we want you to do it as efficiently as possible. And I can definitely state that me personally, it's upgraded my game. The other thing that has upgraded my game is investing in putting myself in the rooms with people that are having the real conversations at the end of the day. With that said, shout out to the family over at Circa 84. If you are not part of Circa 84 and you're looking to take your investment to the next level, there is high level game in there. We've got options traders, futures traders, day trading, stock trading, portfolio building, real estate wholesaling, real estate investment, cryptocurrency investment. We're all in there and we're all having the conversations. And I do have a referral link to that down in the description below. We are going to be talking about creating cash flow. Now, me personally, I am a very much a cash flow guy. I like to have investments that, should I decide to not use my hard-earned money to continue investing, will continue to grow of their own volition. And the only way to do that is to have cash flow within your portfolio. Now, this is going to be directed towards cash flow within portfolios, cash flow within the crypto portfolio, within the traditional finance portfolio. This will be more so my strategy that I am building out within my traditional finance portfolio, because I understand a lot of people are not as far forward as I am when it comes to investments. So I'm going to keep it limited to what I'm doing and what I'm rolling out with my traditional finance portfolio, which I am actively starting now. I just recently restarted that. We broke past one of the key metrics, which is $10,000. Finally got $10,000 back in there. Obviously, I'm all in on crypto. I was not previously all in on my trading portfolio, my brokerage account, my Roth 401k. We got rid of all that because, in my opinion, and I will stand on this till the end of days, the concept of the 401k, the concept of the Roth IRA, when you are working class, when you are not in a tax bracket above the first one, actually, I would say a tax bracket above the second one, to be honest, doesn't make sense to me because there really isn't that much of a tax advantage. And it's forcing you to have to work until you're 60 or older because you don't have access to those funds. The logic behind it does not hold up mathematically if you just did that same work and built out a portfolio that generated income. You would have the ability to stop working at your own behest. You'd have the ability to do what you want to do. Me personally, everyone who knows me knows I am not the stop working person. It just doesn't make, like, that is not how I'm built. But having to work and having to subject yourself to someone messing around with your schedule, telling you when you're going to show up, what time you're going to be there, changing things at their behest, not being in full control of the decisions that are made within the business, regardless of how stupid they are. Those are things to me that are quality of life. Like, you shouldn't go to work every day annoyed. I don't believe in that. I believe that I would rather go be able to do something that pays a little bit less and not have to worry about not being able to live in my house. But they don't teach you that. They teach you to fully fund your 401k and put all this money away so that you have to continue working. Like, I don't want to work for you any longer than I have to. Like, what are we talking about here? But all the stuff they set you up to do puts you in that space to where you have to work for them for until they tell you you're done, or until you're spent. You get maybe 10 years to do what you want to do. And then most of you aren't even getting those 10 years now because they keep saying that we're going to have to keep raising the retirement age because we're not taking our finances into our own hands. So we're going to talk about cash flow because I believe that the only way that you can break free is with cash flow. I don't like paying off, like having to sell off assets to exist is not a good play because then you have to worry about the growth of the asset. You're also eating into the pool that you're living off of. That's also problematic, in my opinion. And that's not to say that I'm not going to have those types of portfolios, but it just, I'm me personally, I start everything with cash flow because I believe that that funds everything else. So, like, I am not a buy and hold first type of person. I'm a buy and hold cash flow type of person. There's a little bit more work that goes into that, in the sense, well, the way that I do it, there is. But we're going to jump into that right after we talk about what's going on in personal finance right now at this time of recording. Now, the first thing we're going to talk about, I'm going to go through these bullet points that I've got for myself, or things that I believe that you need to know. This is a value add for the show. It's a new section that I'm actually, you know what? We are about to make this a official part of the show. Let's talk about it. Things you need to know. That's going to be an official one. And we're adding this in as a value add. It's something that I'm adding to the show. Hopefully you guys get some value from it. I'm going to go through top trends in personal finance, because future financial strategies over here, give my however many points we come up with what's going on out in the ether today. This is generalized based off at the time of recording. What's going on? Do a little bit of research, and it goes through, and I figure out what are things that would be of value to you guys that you need to know that's going on in the financial literacy, personal finance space, because this is a personal finance show. Because we're talking about personal finances, specifically mine, and the moves that I'm making and what I'm doing. So I'm going to give a conversation on these topics. We'll give a little overview, and I'm just going to give my 2 cents on it. We're going to keep it moving. Number 1, increased credit card debt. A significant trend in personal finance is the rising amount of credit card debt among Americans, which is approaching $1 trillion. Oh my goodness, this increase is particularly notable among young adults 18 to 29, where 23% have credit card debt that is more than 90 days past due. Y'all are still faking the funk. You guys are still out here pretending like you got it on the internet, showing off, showing out, wondering why inflation's going up and why we're not getting access to the easy money. Well, why you're not getting access to the easy money? I'm still getting cheap money. That's just me personally. But you know, they keep telling you your credit score doesn't matter. Well, it does when the money dries up. Definitely does, because I got some options that most of you don't have. I also am a part of this, so let's talk about it. During the bull runs, I've talked about this multiple times before. I do carry a credit card float, and I know compound interest. Oh, you're losing money. Oh, you should pay that off. And I'm like, well, I should, except for like, I carry that float so that I can invest more, so I can get more assets. Specifically, since I am involved in the cryptocurrency space, our numbers go up well over 23% compounded, especially during this window of time. So it behooves me to get as much money into the market as possible. So I am willing to float myself a few $1,000s. We are currently in the process of chunking back into that, because when I see these numbers, when I see that everybody else is having credit card debt, I don't want to be in the pack. So we are getting ready to trim that down substantially. That's one of the next things that we're going to be looking at after we make this next play. But with that said, that's my 2 cents on that. Like, you guys you gotta gird up, because most of you aren't running up credit card debt to acquire more assets. You are running up credit card debt because you are living beyond your means. That is what the people at the bottom do. That is what the peasants do. And I understand inflation. Inflation. Oh, everything's expensive. There's a couple of ways you can deal with that. You can work more. You can get paid more. You can trim back. Now, me personally, I am an advocate for doing what you need to do. If it's something that you value, I don't necessarily go out of my way to trim back, but things that I do not use, things that are not of value to me, things that people spend money on to impress, things that I would spend money on to impress other people. I'm not even going to say people, because we all do this. Sometimes we want to flex. But I keep that to a minimum, and I normally take that out of my in-home banking cash reserve. I don't put that on my credit card. I pay for that stuff. Like, if I'm going to flex, I'm working on building up the flex pool actively right now. But at the end of the day, these come down to decisions. If you are that down bad, then you need to switch jobs. You need to go figure out how to get more income. You need to go side hustle. DoorDash, Uber Eats, Instacart, Uber, anything else, second job. You got to do what you got to do sometimes. And the inability for people to adjust their lifestyle. I mean, we all see things getting more expensive. I see things getting more expensive. We got to make the adjustments. It's affecting some people more than others. It's affecting me less so than others. I mean, it's technically affecting me less than people who make more money than me, which is crazy to me. I'm like, how did you get here? But nevertheless, people get there. It is wild. Number 2, financial education tools. This is a good one. There is a growing demand for financial education tools, especially among younger demographics. Nearly 75% of U.S. teens have expressed a lack of confidence in their personal finance knowledge, indicating a strong desire for more education in this area. To address this, various tools and apps are being developed to aid in managing personal finances across different aspects such as income, savings, spending, and investing. Me personally, I am going to be probably making a slight investment. I'm shifting some of my some of my personal tools that I use. I've got some pretty expensive tools that I never use that I've had for years, and I keep getting dinged for it for about $600 a year. And I'm getting rid of that. I'm going to do an experiment. I'm going to add in one of these assistant tools just so I can get a better breakdown of my net worth, what I'm spending, tracking trends, looking at what's actually going on. Because I don't budget. I literally do not budget. I just try to save as much money as possible. And then now that I'm tracking the savings, it is becoming more apparent when I'm deciding which things I need and which things I don't. But I do believe that I want to have that oversight to where I can go in and have that good view. And I want it to be efficient. I'm trying to get more efficient as we are getting closer and closer to these milestone numbers, because this next bull run, which is the next 12 to 24 months as of today, happy Bitcoin halving day. This is when this is being recorded. I'm going to be hitting two, maybe I'm definitely going to be hitting one, maybe two, and there's a potential chance of three big financial critical milestones for myself. And at that point, it's the game's going to be changing for me. We might be getting to touch that mountaintop. We'll see. We will see. Let's hope. We're going to do everything we can to make sure that we do. Number 3, the technological integration in finance. This is something that you guys should know about. The integration of technology in personal financial management is becoming more and more prevalent. Financial technology, fintech tools are increasingly used for budgeting, tracking expenses, and managing investments. These tools often provide personalized insights and can automate savings or investment contributions. Me personally, this doesn't affect me as much. Granted, Delta Investment Tracker app is a fintech tool for tracking your portfolios, but I like to do things manually. I'm still old school. I'm still analog in this respect. But being old school and being analog with the current state of where fintech is works for me, because I like to manually reallocate my funds at all times, because then I can pivot, I can do research, I can make the adjustment on my own. I can set up the trajectory. I can do my projections based off of what I'm doing. Now, will fintech eventually probably get that granular so that it could work for somebody like myself? Absolutely. I'm keeping an eye on it, but I keep my fintech tools to a minimum. We're going to be adding some tools to kind of help as we move forward, but at present, this one is not necessarily for me, but definitely I don't believe that everybody in the wolf pack is going to be as granular as me. So you have to use what works for you. You have to make sure that you have to make sure that you have the ability to get done what you need to get done in the most efficient way possible for you. Oof. Number 4, we got shifts due to economic predictions. For 2024, economic predictions success potentially lower interest rates and cooling inflation. These changes could influence personal financial strategies, particularly in the terms of investment decisions. Lower interest rates might make certain types of investments more attractive, while cooling inflation could ease the cost of living pressures. We are seeing the exact opposite based on the news that we're getting in from the Fed. It's every time I see an update, it's worse than the last update. And yeah, that's just what we've got going on. It's wild to me. My outlook on this has pivoted a little bit, considering the Bitcoin ETF halving and the way that we restructured our portfolios based on updating that thesis. But outside of that, we're still going into this environment. We're trying to trim back debt. We're not floating as much as we did the previous bull run. We are a little bit defensive in that in that sense. And we're trying to be, what I would say is all weatherproof in regards to, we don't want to have ourselves overly exposed to anything just in case something happens. Now, what we're seeing could be war, could not be war, inflation, not inflation. It's not a clear cut, no clear cut answers for anything. Everything is up in the air. And at that point, you just follow the thesis. But I'm following a little bit more conservative than I have previous years, in the sense that we are now shifting into like, let's clear some debt. Obviously, we're going to be using debt to deploy to buy assets, but we're trying to clear it as quickly as possible and get ourselves into a position where we're just straight investing, and we're just going to buy less stuff and gird up and acquire as many assets as possible and dollar cost average. And if prices are dipping, we're buying a little bit extra. If prices are going up, we're doing regular allocations while trying to free up as much cash flow as possible to just go into investments. Number 5, the rising of cash holdings. Now, this is an interesting one. In response to economic uncertainties and market volatility, there have been a noticeable increase in cash holdings. Investors are finding comfort in cash, which offers liquidity and stability during turbulent times. As of late 2023, the U.S. money markets funds held a record of $6.3 trillion in assets. I know that with the potential of war between Israel and Iran, obviously big elephant in the room, a lot of people pulled out completely out of the markets. And, I heard this morning that might not be happening because both sides are just kind of like not talking about it, not really worried, not threatening more attacks, not threatening retaliation. Everybody's just going back to business as usual. Everybody got their lick back apparently, and they're just moving forward. So this goes back to the narrative. I mean, if people are going to be sitting in cash, that's fine. If the markets are turbulent, that's when the opportunities are. The markets are definitely volatile right now. We're having a Bitcoin having sell-off, preemptive scare of war. People sold out positions. Inflation numbers not coming in where they needed to. People are getting out of the market. Me personally, I don't believe in holding cash, but I am an advocate of keeping a cash reserve in your investment accounts. Now, shout outs to Wall Street Trapper. He recommends, and he's active in these markets, and I have taken this to heart, of keeping 10% of the portfolio value in cash for dips and opportunities. Totally makes sense to me. I'm terrible at it. Now, what I have done is I've got myself set for a target of 5% in the crypto space. Granted, we're getting ready to deploy all that. We're getting ready to deploy that because we're going to get some buys before some pre-halving buys in, because the altcoin market is just decimated right now. Still, even with the bounce back, they're bouncing back to numbers that were lower than what they were. So that doesn't affect me. It's still bringing my buy averages down in. So we're going to be doing a little bit of shopping going into this halving. And I actually might live stream while I do that. That'd be kind of fun. But we're getting to a point now to where we're getting to a point now to where, there should be some cash. I don't people take this a couple of different ways. Now, for investors, absolutely. You've got an account. You should have cash in that account for deployment, for just in case, all sorts of stuff. That makes sense. But just holding cash in your bank account, like the average person, because bringing this back to the working class, if you're working class, you should have all assets. You should constantly be buying assets. You should be getting yourself out of that class. You should obviously, we're all going to work, but your work should be fueling investments, should be fueling the acquisition of assets. Being working class and just existing as working class, that's a setup for failure. We're seeing that that's not working. These people they're telling you you're going to have to work longer. If that's the class that you exist in, then you're on the losing side of this proposition. So I don't think that working class people should just be sitting with cash in the bank. me personally, I play the opportunity fund game. Like I'm constantly in a game, which we have accomplished. We hit the metric on that, where we are constantly looking to consistently update and get to $10,000 and then deploy that. I do not save that in the bank though. We save in the market. We save in a hyper accelerated savings account during the Bitcoin halving and the Bitcoin bull run of saving in Bitcoin. We keep a bare minimum in cash. I kept 10% of that in cash and we're deploying that now because it can generate income. Like it's not accruing or building or stacking or working hard enough in the bank. It just doesn't make sense. Like I'd rather have it generate income and then off that income, because now we've created an income generating asset, I'll pull the cash out monthly when we get that dividend check and put it back in the cash reserve. So that way it's ready to deploy. And then we'll have a minimal sell off at the end of it when it's all said and done. And then the only thing that really we'll be worried about is the Bitcoin appreciation. We'll see what we can do with that. Number 6, gig economy and financial services. The gig economy continues to expand with predictions that half of the U.S. population will engage in gig work by 2028. Financial institutions are adapting this shift by offering services tailored to the needs of gig workers, which would include flexible banking services and personalized financial products. Yeah, because everything's getting more expensive. Like you're all going to have to get to they're shifting to a point to where if you are a working class person, it's not even going to be working class. You're just going to be working poor and you're just going to have to continue to work. And the reason I'm an advocate of just putting your nose to the grindstone and at minimum for a year, I did it for 3.5, almost 4 years. And I still dip back into it every once in a while when it necessitates or I want something. Putting the nose to the gridiron, putting in 60 to 100 hours a week, and getting some stuff handled, getting a footing, getting something started. But now you're just going to have to do that to exist. And like that's the thing that people don't understand. Like instead of going and doing the 60 to 100 hours a week, you wanted to do 40. You did the bare minimum. Now inflation hits. Now you can no longer afford to exist. You are now working 60 to 100 hours a week just to do exactly what you're doing right now, doing 40 hours worth of work because everything's more expensive and you want to do the bare minimum. So yeah, I think that the working class is going to turn into the working poor. It's rapidly turning into the working poor. Like if you believe everything that you see on TikTok, which I think part of which is defeatist propaganda to make people not inclined to try, not inclined to work hard. But I think some of it might be true for people that want to just do the bare minimum, work 35, 40 hours a week and get just enough to get by. And now stuff is going up and you were doing the bare minimum. So the bare minimum has to raise too. So I can definitely see the shift to gig economy becoming a very large thing. I mean, it's super useful if you're trying to get some stuff done, get yourself moved ahead, put yourself in a different position than you previously were in. But unfortunately, if it comes down to the point to where like you're doing it because you have to, then that's going to be not good. That's going to be a not good state for people. Big tech's number 7 is big tech's influence in financial services. Big tech companies are increasingly encroaching on the traditional financial service sector. Companies like Apple and Amazon are introducing financial tools that could integrate with their existing customer platforms, potentially reshaping how traditional banking services are offered. Absolutely. I might be switching back over to Team Android because Apple's security is complete garbage. Their network chips are complete garbage. And, I only switched to Apple to really suss out what was going on with the networking issue. But now that I've been here for a while, the security is not what it needs to be for the stuff that I'm into. which poses a risk for me. So like, the status symbol of having an Apple phone is kind of falling off anyway, and basically all of them are the same, with the exception of the networking issue, because like Apple phones, even the new ones, are horrid with their networking infrastructure for how they're setting their phones and their devices up. It's just not good. But the security thing, that is a definitive issue for me. Like, I'm still going to be using Apple products for content creation, but I think as far as daily drivers and stuff like that, like I'm going to switch back to my Android phones. I had no problems with them, and the way that I utilize those phones, they worked better for me personally. Like, I mean, at this point in the game, it comes down to things like that. Like the security and the networking are issues for me for a phone that I'm using every day. I do like everything else for content creation. I'll still use it for work. It's just this stuff, the crypto stuff, and everything that I use it for in like my day-to-day life. I do like the Android experience better. So we'll probably be shifting back over to that, which sucks because now I got an Apple Watch and I got a watch to replace. I got a phone to replace. Like, this is just base consumer. I'm due for an upgrade, but like still annoying. And the last one, consumer shifts and experimental spending. Ooh, there is a noticeable trend towards experimental spending, particularly among younger generations like Gen Z. This demographic is prioritizing equality of life and experience over traditional savings, which is influencing spending patterns that could have implications for personal financial strategies. This is an interesting one, and it's again, this goes back to that defeatist narrative. If everything's so expensive that you can't just afford to exist, then you're not motivated to save money. You're going, oh, I'm going to go to Coachella. I'm going to go see Taylor Swift in Tokyo. Like, I'm going to go overemphasize for these experiences. And I see plenty of people in my personal life that I see that just save up to go on a big trip. And it's like the amount of money that they saved up. I'm like, if you just did that, like, if you just continue, if you bought assets, you set up a portfolio, like you could just fund those trips and then you could just go. And then they'll go on the big trip and they come back and they're broke. And then like they got to get nose to the gridiron again to build up just enough money to go on these big trips again. And it's a cycle that as they get older is going to bite them in the ass, because then those people are going to be the older people that you see on these news stories that are complaining about, oh, the system's broken, like da da da. And it's like, you went on XYZ, like you don't just get to do that indefinitely. Like, you're gonna be old, you're gonna need something in the backup reserves, and you spent every dime you had going on big trips, looking like you were doing something for a few years, taking all the pictures in the world, and you're always on the go, and you're the woman who's traveling the world, or you're the guy who's showing the experience here, there, and everywhere, pretending, faking the funk. And then you have nothing to show for it at a later point in life, and you're just broke. And you're talking about, oh, reckless rate and arrow, you're lucky. Like, no, I just didn't go on big trips. Like, I just didn't take vacations. I didn't take days off. Like, I just went to work. I did what I needed to do till I didn't have to do it anymore. And you did what you needed to do what you wanted to do in the short term, but now you're stuck in a situation where you have to do this indefinitely. Like, you are now trapped in the system. You are trapped in that financial matrix. You're trapped in that financial rat trap. And now there's seemingly no way for you to get out. That's going to close out the things you should know. Now we're going to get over to the next section, and the crux of the show, which is generating cash flow. Now, me personally, so this is my strategy, this is my thesis, and it coincides with my overarching thesis. The overarching thesis being, for me, Bitcoin's going to $1 million. That's my thesis. Million or zero. That's where I'm at with it. With that thesis, what we have done is we have shifted our traditional financial portfolio over. And it's not going to be the way that most people are going to think. Most people would be like, oh, okay, so Bitcoin going to $1 million, buy the Bitcoin ETF. Now, for me personally, I hold Bitcoin. So I am not buying the Bitcoin ETF. It does not fit. It's just so redundant that it makes no sense. Like, I don't need middleman Bitcoin when I know how to acquire and store Bitcoin myself. I'll just do that myself. I can continue to do that myself. It's not a big deal. Very easy to navigate those waters on my own. And yeah, so we're just doing that separately. So what we're going to do is, for the way that I set my portfolio up, and here, let me see. Let's pull this up. BTC. We have converted everything over to a singular position for now, and I'll explain why here in a second. Now we're going to share the screen so we can talk about this, because this is probably the third or fourth time I brought this up. Your favorite gurus are not talking about this. They are not speaking on it. Oh, dang, we got down to 40s. Oh, that was 52 weeks. That was a while ago. But they're not talking about it. They're not bringing it to your purview. I'm not sure, because most of these same people are very not supportive of the cryptocurrency space. But these fire movement people, the dividend people, this is one of the best workhorses in the dividend market right now, period. And it's a Bitcoin halving, Bitcoin bull run. The next 12 to 24 months, this thing's going to be running the bag up hard. Now, could it be temporary? Sure. But I mean, based on the levels that we're at and the levels to where we're going, and I think it's still going to be a producer moving forward, because I don't think we're hitting $1 million this bull run. Like, if we do, something catastrophic has happened to global markets, and it's bedlam. That's going to be a problem that we probably don't want. So we're not going to $1 million this bull run, but we are going to $1 million in the eventuality of things, I believe, within my lifetime. So this is a good one, in my opinion, because it fits in with my thesis. It fits in with the thesis of my initial starting portfolio, which is specifically set up for income generation. Now, what I am going to have to do is I'm going to have to open 2 more portfolios. One is for something that we're looking down long-term for the family. The other one is going to be my buy and hold positions, because there's some stocks that are positions that I want to be in that are going to be buy and hold positions. I don't want everything lumped in together. I want them separated so that I can see how they're doing individually. But no one's talking about YBTC yet. So let's pull it up. We're going to talk about it. What is it? Round Hill Bitcoin Covered Call Strategy ETF. YBTC is the first US listed Bitcoin covered call ETF. The fund offers exposure to Bitcoin, subject to cap, while providing potential for high current income. YBTC is an actively managed fund. And so, like, as you can see, and I know they're going to come from my neck with the distribution yield on this, and the 30-day yield is wild. I mean, hey, man, what can I say? It's a thing. It's a thing, people. That's all I got to say about it. And it's, I'm loving it. Oh, and they're going both ways with this. This is interesting. Okay. So, I mean, my income portfolio, I do like the call strategy. I do like them. And the reason is, this is a monthly payer. The 30-day dividend is 3.09%. Distribution yields 88.34%. And they've been paying since they opened. I've been in since they opened. You know, the amount paid, like when you look at these dividends, like they did, like the first month was $1.33 per share. Second month, $1.81 per share. Third month, they killed it. $4.12 per share. Now, what we're looking at here is this is a workhorse, and it's in its peak market. This, I was not there for January, but I was there for February. Actually, I think I might have started this in January. I don't know when I bought my first shares. Actually, I didn't, because for January, I had the Bitcoin ETF and I was doing research looking for something that produced income. And this was when I retconned my thesis for my portfolio and redid my portfolio. It was in February, or no, it was in March last month when we got that dividend payout that I sold off my QYLD position. QYLD came from the primary position because of the thesis shift, the finalization of that thesis shift, which is Bitcoin's going to $1 million. So the income, if there's a covered call strategy for Bitcoin, that comes primary. QYLD will be the secondary. And so, like, the way that this works is my primary position, until it hits the specific metric that I need, and this could be whatever it is for anyone, whatever that amount is. Me personally, I'm covering bills. So this portfolio is built out, and it's not that, once I get to my core expenses covered, I'm going to just quit my job and work. I'm not one of those fire movement people. I don't necessarily agree with that. I have no intent of not working. What I do have an intent to do is be able to work on stuff that I want to work on, stuff that interests me. Be able to just, maybe I want to go to school, go down a rabbit hole, learn a new skill. And I don't want to have to worry about going to work. I don't want somebody jacking with my schedule. I don't want to have to worry about asking for time off. I want to be all done with those things. I want to be like, look, I ain't going to be here. Deal with it. That's the realm that I want to be in. And that way we can have that conversation. Like, I'm not going to be here from this time to this time. And it's not necessarily like, I let people know, like, normally months in advance when I have to take a day off, but like, I'm not asking anymore. Like, I want to get to a point to where I don't have to ask, because at a certain point for me, and this is just the way my brain works, I'm like, if I got to ask you, bro, like, I'm an adult. Like, I'm an adult. I show up every day. I'm first person here, last person to leave. Like, I don't want to have to ask. I really don't. Like, I work too hard to have to ask. Like, I work harder than everyone I work with. Like, plain and simple. Like, if there is a challenge of, like, we're going to grind it out, I will grind it out harder than anybody, anywhere, period. Like, I don't leave. I don't get tired. I barely take lunch. Like, the concept of asking someone to do anything for me is annoying. It's so annoying for somebody like me, because I'm just like, bro, like if I need a day off, like, give me the freaking day off. Like, I don't want to have to ask you. And it's not like I'm like, hey, I'm not going to be here tomorrow. Granted, we get to see people that show up and do that sometimes. Like, everybody has those jobs where it's just a person who does whatever the heck they want for whatever reason, because they can or whatever. I don't say nothing, but I got to ask. And then it's like, oh, well, let me think about it. Like, no, don't think about it. Like, I'm not going to be here. Oh, well, like, you don't have a job. Okay. I'll get another one when I get back. Fine. Like, we can play that. Who can play that game? The dynamics, it just makes me feel like a peasant. And, like, me personally, I know that I'm not a peasant. So I don't like it. But back to the topic. I'm trying to, so, like, once this gets to my metric of what it needs to produce a month, then it'll stop rolling into itself. So, like, right now I manually go in and buy additional shares. I could set up a drip and have it do it automatically, but I don't want to have to go turn it off. So I just do it myself. Now, if we're talking about the income part of this, the way that I set my strategy up is I will continue, all money that goes into the primary position. So anytime I put money into my brokerage account, I buy YBTC. I'm dollar cost averaging that position. I do not switch that primary position off, period, unless it shifts and it's no longer the primary position. So every time I move money into this brokerage account, this specific account that holds that's the income account, I buy YBTC. When the dividend payout comes for YBTC, those dividends spill over into the secondary position. So in that case, I will buy the dividend that I get, the payout, because like you see where the dividends come from every month. So this isn't hard to figure out. When those dividends come in from YBTC, it will then, once we get to the level that we need to, I can then start purchasing with those dividends QYLD, and all the dividends will go into QYLD. As the QYLD position builds up, once I get that to a certain level, so now you're getting 2 dividends. So this just scales out the way that I'm going to do it. So now I've got 2 dividends coming in. I got my YBTC dividend, and then you've got your QYLD dividend. Now, until the QYLD dividend spits out to the point that I need it to, which whatever I set that metric up. So I do mine based on what is coming out of it. And it's going to be a generalized range. Actually, it won't even be a generalized range. It's like once it hits that metric, until it doesn't hit that metric, the rule stays in play. Now, if it dips down or we have some sort of dip in the market and like now it's not spitting out as much as it needs to, then the rules reset back to the previous rule set. So it's like, cool. Like if YBTC isn't, so for instance, if I needed this position to spit out $500 and I get to a month where it spits out $500 and I go, okay, cool. Next month, new rules apply. And so then it spits out $500 again. So then now it rolls over, $500 goes straight into buying the QYLD position. Now the QYLD position, I'll go, okay, well, this one needs to spit out $200. That's what I need out of this position. That's how much money I need that specific position to generate. And I'll buy shares until the dividend lines up with the $200 that I need. Now, if I have a month where YBTC, it goes, hey, we're back in the bear market, it's spitting out $300 now. I will roll back because obviously I'm buying in. Anytime I put money into the brokerage account, I buy YBTC with that. But if that's still not enough to keep me at that range, then I will continue I'll take the YBTC dividend, roll that back into YBTC, and then whatever is on downstream can keep doing what it does. But the deal is the positions, I have the way that I'm buying out this portfolio, and you guys will see this as we start moving into the secondary and third and fourth position. I think I'm going to whittle this down. This portfolio is probably going to be, I'm trying to keep all my portfolios under 10 positions. So 10 will be the cap, but it'll probably be under 10. And for this portfolio, the first 3 are for sure going to be actively managed, call people trading in the market, because I'm not a good trader. So I want some people trading for me that are good, that do their job well. And so what we're going to do is hold up a second, getting text messages during my show. Good God, let's get you out of there. Get you out of there. Oh my goodness. Business never stops, people. It never stops. Clear all those out. And let's go ahead and close this. So that's not an issue anymore. So what we're going to do is we're going to keep rolling out these positions, and the position. So position 1, which is YBTC, the dividend from that buys position 2. So at this point, I am not buying with my money anything but position 1. When I put money into the market, my primary position, that's the only thing that I physically buy with my money. So like when I pull money out of my account and put it into my brokerage account, it goes in, it buys position 1. The dividend from position 1 buys position 2. Now, and then you can roll position 2's dividend back into position 2 to help scale that out. And then position two's dividend, after it hits the metric that it needs to, buys position three, and so on and so forth as it waterfalls down. But all the money coming in goes into position one. And that's the way that I've lined out the way that I'm doing my portfolio. Now, what this does is it creates a cash flow waterfall. Now, as with some of the leverage stuff that we're doing, we will, and this is going to be interesting, to help pay back those debts faster, because I do budget out my debt, which is a weird thing to do. They go, well, you should budget your savings. I'm like, well, if I save as much as possible and I'm using asset and I use debt to buy assets, then like you just budget out your debt and pay it back. So, and so far it's been working. The Discover play has worked. The CashApp play has historically worked. So what we're doing is we are going to cut our dividend in half and take half of the dividend. And so the reason we're doing this is because, like, once you start getting into a few $100s, you can still have it steamrolling, but like you can also take that money out to pay the debt back faster. So like that's what we're going to do. If we're going to use debt to build out these accounts, you have to factor that in my opinion, to help accelerate paying back the debt. Because again, we don't want compound interest. You want to pay it off. Specifically for the way that I'm utilizing the debt, you want to pay it off while it's still within the 0% range, because then you only pay 4.5% on the debt. You're putting it into this instrument that is producing well, I mean, if you're paying nothing but the 4.5 over a year or 10 months in the way that we factor it out, then this just builds money. It's mathematic. Like, you're not hitting the compound interest. Oh, well, people don't pay it off. I do, though. I don't care what people do. I'm giving you a strategy that I utilize, which means if you're not using it the same way that I do, then like that's going to be problematic. And so there's a couple of reasons that we want it paid off fast, because they go, oh, well, it's 0% after the 4.5. So technically you should pay that off last. Me personally, I don't like risking something happening to the asset, because I don't want to have to cash out the asset to pay it back. So we're trying to pay it back with cash flow. So obviously I have a chunk of my check, my budget check now, that comes out of that pays that back. But I also want to use the dividends to hyper accelerate that. And the reason I do the draws based on paying it back in 10 months is so that I know if something goes wrong, if I have a bad month, if I hurt myself, if I do whatever, there is a way for me to pay this back. Like, I have a cushion of 2 months to where I'm good. And I normally pay it back faster because I don't like carrying debt against my assets, because then I don't want to lose the asset, right? This is a fashion. And the reason I say that we should use all the tools is because these are plays where you can build out wealth, you build out that income stream, and then you just have it. Like, now I have an asset that produces income. I don't have to get rid of it. I don't have to do anything. I'm increasing my income. I don't have to go beg for a raise. I don't have to go ask where my bonus is. I don't have to, like, you don't have to do anything there. I just keep doing exactly what I'm doing. And this is scaling against what I'm being paid. And as it scales, you start having more options. You start having more investment options. And my goal is eventually this portfolio, actually in the initial onset as well, this portfolio is going to fund the buy and hold portfolio, because I've got some degenerative stock, a degenerative stock play that fits within my narrative that's going to be funded off of these dividends. I'm going to be taking a little cut, and it's going to go in that portfolio. But this is the way that I look at things, and like, this is my thought process on it. And I know it could be convoluted and complicated to some people, but like, I love talking about this stuff. I'm very heady about it, and I love being in a position where I can experiment and we can look at the results. Because obviously, if you're not tracking and you're not seeing what the results are of what you're doing, then you don't know where you're standing. And if you don't know where you're standing, then like, you're probably losing money. You should, like, it's so interesting to me how many people just do stuff and then they're just like, oh, like I just thought we was good. Like I don't know why this didn't work out. And it's like, were you tracking your position? How do you know you made money? Well, it said it went up today. What about when you got it? Like there's because the entire, like for instance, the entire crypto market is green right now, but all those positions are technically still down because like it went to a bottom and then came up 20%. And they're like, hey, this is up 20% today. And it's like, your position's not, like you're down 30% still. Like it's such a weird thought process. But yeah, so YBTC, this is a rare one, where a rare opportunity where this met all the requirements of both of my theses. Because as far as my brokerage account is concerned, this initial one, it's all about income. The overarching thesis, though, Bitcoin going to $1 million. Income generating position that's tied to Bitcoin that is making plays off Bitcoin. That way I am getting paid both ways. When Bitcoin dipped, this actually did not dip as bad as I thought it was going to, which was interesting. You know, like obviously it's red across the board, but like it wasn't as red as Bitcoin was. And I'm going to be interested to see what type of income they were able to generate off of this for this month, because we did have a good dip this month. So like this is going to be a really good experiment. Now, if it goes the way that and we're looking good, next month we're going to have some big plays to talk about in regards to my portfolio, and like we're going to be able to start having conversations because we should be getting into a space to where there's more than one position in it. We're going to leave it at that. I hope you guys got a ton of value out of this. If you appreciated the show, you liked what you saw, this was of some sort of value to you, definitely leave me a like, definitely share the video, feel free to subscribe and join the Wolf Pack. If there's things that you want me to cover, there is an email down in the description below where you can send me stuff that you want me to react to, things that you think I should talk about, stuff that will add value to you guys, because obviously while I am sharing the knowledge and the strategies and the things that I am doing personally within my portfolio, I am trying to add as much value as possible to those who are on the same journey along with me. I do appreciate those of you who are here, those of you who are in the Wolf Pack before old Reckless Raid and Arrow reaches the mountaintop, because I'm much more obliged to talk with you than at you, because we are all in this struggle together and we're sharing game. Like we want this to be the most efficient. Me winning doesn't mean you have to lose, even though we are in competition. But we can all build together. There's plenty of money to go around, and there's a lot of game out there. So definitely tap in with me. I shared my thoughts. I'd like for you guys to share your thoughts with me down in the comments below. Let's have the conversation. Till next week, guys. It's been Future Financial Strategies. It's your boy Reckless Raid and Arrow, and I'm out. Peace.